Hello and a warm welcome to everyone. My name is Faisal Yunus, and I'm from the Migration and Remittances Program at the United Nations Development Fund. I'll be your co-lightning session. I'd like to welcome you to this important webinar. More than 300 colleagues have registered to join us today from Ethiopia and beyond, from more than 210 unique organizations, comprising 85 private sector organizations and 125 public sector organizations and civil societies. We wish you all a very warm welcome. And before we begin, let me brief you about the agenda for this session. So we have an exciting agenda today and some excellent guests. To start with, we have the distinguished guest of honor, Patricia Barandun from SDC. Then we have an introductory session on UNCDF and the Migrant Money Program by my colleague Serge, followed by the Ethiopia Country Insights presentation by Mercy, and then a brief Q&A session. And we have the most exciting part of the session, which is a panel discussion between some exciting speakers from the National Bank of Ethiopia, Qatar Digital, Tunes, and FSD Ethiopia. And then we have a Q&A session for the panel. And lastly, we have the closing remarks by Serge. So, and mind you, just to let you know of the logistics, this webinar is being recorded. And we have two Q&A. Please feel free to type in your questions in the Q&A session anytime during the session. We have a lot of participants, so we may not be able to answer each and every question, but we'll try and address as many as possible. So without further ado, let me pass the baton to Serge for introducing the guest of honor. Over to you, Serge.
Thank you very much, Chris. I am Serge Munyamo, lead financial specialist, and I lead our private sector engagement at UNCDF. Distinguished participants, I am pleased to welcome you to this webinar on remittances and financial inclusion, leveraging the inclusive innovation framework to increase formal remittances to Ethiopia. First, I would like to thank our keynote speaker and all the panelists who have agreed to participate in this webinar. Secondly, I would like to introduce the keynote speaker for the day. This is Patricia Barandun, Head of Thematic Division on Migration and Forced Displacement at the Swiss Agency for Development and Cooperation. Patricia, please, you have it.
Thank you very much, Excellencies, ladies and gentlemen. On behalf of the Swiss Agency for Development and Cooperation, I warmly welcome you to this webinar on remittances and financial inclusion, especially focusing on innovation to boost formal remittances. Migration is a reality across the globe. As an epicenter for the migration cycle in the region, Ethiopia plays a pivotal role in continuing to contribute to the effective governance of migration through an approach that is migrant rights focused. An estimated 1.2 million Ethiopian migrants send about $5 billion back home each year to cater to the basic needs of their families. This accounts for more than 5% of the gross domestic product and about 1/4 of foreign exchange earnings. I would like to acknowledge this huge contribution of migrants to the well-being of their families and to the development of Ethiopia. While it is important to acknowledge that remittances contributing to realizing basic needs and rights, it is especially important to us gathered today here to work on creating opportunities to ensure that remittances also contribute to financial inclusion. Migrants and their families should be able to access services that allow them to save money, access credit, or get health insurance. Furthermore, the size and scale of remittances also create the possibility for harnessing these flows for productive investment, thus contributing to Ethiopia's long-term development. Switzerland has been partnering with the United Nations Capital Development Fund on the remittance program since 2019, with the objective of bringing digital financial services to unserved and underserved migrants and their families. It is very encouraging to see that UNCDF, through its country assessment on inclusive innovation, is providing key recommendations for stakeholders to make remittance products innovative and inclusive. Since Ethiopia joined the call to action, significant achievements have been made. Let me just highlight a few of those. The National Bank of Ethiopia has issued a directive which allows banks to open interest-bearing, no-fee foreign currency savings accounts for both in-country Ethiopians and those abroad. It has amended the Banking Service Proclamation aiming to include digital financial service providers among the institutions allowed to provide payments, remittances, and insurance services. Finally, it has allowed a consortium including major players to offer telecom services in Ethiopia, while at the same time, Ethio Telecom launched a mobile money service that offers users the ability to deposit cash, pay bills, send and receive money, amongst others. This significantly paves the way for inbound remittances to be terminated in digital channels. Now, it is also important to underline that the existence of fragmented and inconsistent regulations are challenges in realizing a conducive environment for financial inclusion. It's thus important that we all are committed to working together to creating an enabling environment at the country, region, and global levels to help ensure that the full potential of remittances for household well-being and sustainable development can be realized. It is therefore important that the Ethiopian government, particularly the National Bank of Ethiopia, continues to strengthen its commitment through its various policy reforms, and that another important player, the private sector actors, work towards offering migrant-centric and gender-smart digital financial products. We're therefore delighted to have key partners around the virtual table of this seminar to see what we can do on the policy front and what this private sector has on offer. To conclude, I would like to thank UNCDF not only for organizing this webinar today, but also for the excellent cooperation throughout the years. I'm confident that this session gives us many ideas on innovative approaches to foster inclusive innovation. With these few words, ladies and gentlemen, I'd like to express STC's appreciation to partner with all of you, and I look forward to today's deliberations and conclusions. Thank you very much.
Thank you. Thank you very much for these inspiring opening remarks. They will lead us to productive discussions today. Before we dive into our main topic, we'd like to give you a light description about the involvement of UNCDF for the cause of migrants and the methodology behind the concept of inclusive innovation. The United Nations Capital Development Fund is an investment agency within the UN system with a focus on economic development in worlds for the 6 least developed countries. With its capital mandates and instruments, UNCDF offers last-mile finance models that unlock public and private resources, especially at the domestic level. Over the past 25 years, UNCDF has led the thought leadership and implementation on financial inclusion within the UN, providing financial and technical assistance to more than 160 private sector partners. These successful interventions in diverse markets have deepened our conviction that to strengthen financial inclusion and resilience for the vulnerable segments, we must engage in the sectors within the real economy with which those segments engage and transact every day. One of these sectors is remittances. As sufficiently reminded by our keynote speaker, remittances are a crucial financial source for families of migrants. And when they are provided digitally, they present a vast opportunity for broader social impact and also financial inclusion of migrants and their families who are sending and spending remittance flows in the real economy. Without disregarding the role of multilateral organizations who have long time been financing ecosystem initiatives towards migration and remittances in Ethiopia, UNCDF's approach intends to enable the private sector to fully play its critical contribution to leveraging remittances for the benefits of the underserved. Indeed, while solving for the issues of improving remittance flows, the private sector increases market competition towards deepening financial sector, makes financial products more affordable, and eventually strengthens financial inclusion for low-income segments. We are glad that an overwhelming majority of the participants today are from the private sector. Domestic and foreign banks, fintechs, microfinance institutions, telecoms, and other non-banking institutions. Each one of you, with your respective roles within your respective institutions, is important for the change to manifest. Once we understand the opportunity of remittances, remain few critical questions for the ecosystem stakeholders. Which migrant-centric innovations are viable for the markets? Which digital innovations are accessible, affordable, and contribute to the financial resilience of migrants and their families in Ethiopia? So the Inclusive Innovation Framework of UNCDF is then an approach to solve these challenges that ecosystems face when it comes to innovation. So what is inclusive innovation? It is achieved by creating products and services that equally appeal to all customer subgroups. Every customer, regardless of gender, age, literacy level, income, should be able to access and use these products with equal success, and the products should in turn build the financial resilience of all customers. In the case of remittances, this will mean ensuring that innovations are migrant-centric and gender-inclusive. In other words, making sure that innovations consider the specific circumstances, needs, and sticking points experienced by migrants throughout their outgoing or returning migration experience. But also it means ensuring that solutions consider gender norms, roles, and inequalities, actively address them, and correct exclusions. In order to catalyze not a specific stakeholder, but the entire ecosystem to innovate for the benefit of the underserved, the Inclusive Innovation Framework needed to consider a 360-degree approach. Now, it means working at three levels. At the ecosystem level, with policymakers and regulators, to think through and implement enabling frameworks for migrant remittances on both the send and receive side. At the institutional level, it means working with remittance service providers to reimagine remittances completely. And at the product level, it means working with migrants to understand and deliver what they truly value in financial services. In response to the challenge of getting clarity on migrant-centric and gender-inclusive innovations in Ethiopia, UNCDF is proud to announce the release of the Ethiopia Inclusive Innovation Assessment Report, which represents a solid contribution to the challenge described. For those of you who have not discovered yet the report, you may follow the link that will be provided to you on the chat. The content and discussions of our webinar today are largely based on insights coming from that report and on perceptions of key stakeholders of the Ethiopia remittance ecosystem. It is UNCDF's hope that the insights and discussions shared today will trigger and nudge the stakeholders to contribute individually and collectively to an Ethiopia remittance ecosystem where inclusive innovation is brought to reality and allows the increase of formal remittances. Before I conclude my opening remarks, allow us to present our special thanks to the Swiss Agency for Development and Cooperation, SDC, and the Sweden International Development Agency, SIDA. The efforts of UNCDF on migration and remittance to address the challenges of current remittance markets that do not necessarily work for people on the move are generously supported by the SDC and SIDA. Without their support, the policy and regulatory efforts that are further reinforced by the engagement with the private sector in Ethiopia would not have been possible. In fact, over the last 3 years, with the leadership of the Ministry of Finance and the National Bank of Ethiopia, UNCDF has been able to work closely to improve the policy and regulatory environment for formal and digital remittances, which has led to 8 directives and amendments since June 2020. The collaboration with NDE has also been on AML CFT systems, supporting the upgrade of the core banking system and the implementation of Central Securities Depository and reviewing the risk management framework. All of these efforts are equally complemented by the support on improving the remittance data statistics, both formal and informal, by supporting the foreign exchange monitoring system, which has been an IMF-supported initiative. We look forward to the continued guidance and leadership from the Ministry of Finance and the National Bank of Ethiopia towards targeted interventions, financial or technical assistance, that supports the ecosystem towards inclusive financial markets in Ethiopia. I will end my opening remarks here, and I would like now to open the floor to Mercy Waishira, Financial Sector Specialist at UNCDF, to discuss more on country-specific insights. Mercy.
Thank you so much, Saj, and welcome everyone to the webinar today. The Ethiopia country assessment, which has just been shared to you on the chat, looks at Ethiopia as a remittance recipient country or the country of origin of migrants. In conducting the country assessment, we conducted in-depth analysis based on transaction volume, geographic coverage, gender distribution, and ecosystem preparedness. The corridors selected in the assessment are the Sudan and Ethiopia corridor, where we see limited remittances services available, and also informal remittances, which are prominently primarily due to the Sudan embargo. The second corridor that we also considered is the USA-Ethiopia corridor, where we see strong competition exists between the traditional and the digital money transfer channels. We also acknowledge that there is a high flow of migration in the Middle East to Ethiopia corridor, and most women who migrate as foreign domestic workers. So insights were also drawn from these corridors. In this webinar, we'll present a summary of the study. You are invited to refer to the report through the link shared on the chat for more details. As part of the process, UNCDF has conducted a wide range of stakeholders interviews, ranging from banks, payment aggregators, international money transfer, development organizations, central banks, and among others. These interviews were complemented by secondary research and also prior market knowledge. So when we zoom in into Ethiopia, we see that migrant remittances have become an increasingly important source of foreign currency, and livelihood for many Ethiopian families. According to the National Bank of Ethiopia, remittances account for more than 5% of the gross domestic product and also a quarter of the foreign exchange earnings. The formal sector, however, remains suboptimal compared to the market potential, with 65 to 80% of remittances inbound through informal channels, as per the National Bank of Ethiopia. Let me be more cautious here. There has been significant efforts undertaken by the National Bank of Ethiopia in the last 3 years to help minimize the gaps in remittances through the formal and informal channel. These efforts include the joint efforts with IMF towards moving to a market clearing exchange rate. We've also seen the implementation of the payment instrument issuers licenses, which has seen Ethiopia transform to a bank-led hybrid. This has also allowed the non-banking financial institutions and the fintechs to be able to partner with payment instrument issuers through the APIs. We've also seen availability of foreign currency accounts that have been able to mobilize more than $100 million in the last 2 years, with 23 banks opening more than 30,000 foreign currency accounts. This is also in addition to the telecom and financial sector reforms that have helped improve investment, has increased competition in the market, and also reinforced the role of digital payment, especially in cross-border contexts. UNCDF has been working with the National Bank of Ethiopia to help strengthen the foreign exchange monitoring systems and also help capture remittance level data. There's also ongoing discussions to reflect estimation models for formal remittances, while also considering informal survey. All these efforts that I have highlighted reflects the commitment of the government and the National Bank of Ethiopia towards improving the flow of remittances through formal channels. The Ethiopian innovation ecosystem, however, we see it's greatly underdeveloped compared to its regional and also global counterparts. However, it is also a highly promising innovation ecosystem. The payment systems are being modernized, and interoperability between banks was recently achieved. More work is being done to achieve significant sector innovation. The digital uptake remains generally slow, and the country is predominantly cash-based. There are still challenges when it comes to product delivery, such as lack of access, especially for the rural population, pricing, and issues to do with digital literacy. At the institution level, we see capacity gaps, lack of investment in research and development, among others. And at the ecosystem level, we see limited payment and financial market infrastructure. This presents a massive opportunity to support the development of both migrant-centric and gender-inclusive innovation ecosystem through investment, technical assistance, and an enabling policy. So I will highlight the key findings from the country assessment, and I will invite you to read the country assessment in details at your free time. So although the government and the National Bank of Ethiopia have launched various strategies and initiatives to improve the financial sector and support digital payments, the formal sector still remains suboptimal compared to the market potential. According to our country assessment, we found that 46 informal networks still remain the most prominent way in which many Ethiopians are sending money, particularly to rural households. The transaction cost through informal channels also varies between 0.0 and 1.5% compared to 6.5% average cost on the formal channels, according to the stakeholders interview. It's important to also note that informal channels are not tied to regulation requirements and also do not carry the operational cost of formal players, such as rent, salaries, and electricity. And other drivers of lower costs in the informal channels include a better exchange rate than that of 25%, which is below the National Bank of Ethiopia fixed exchange rate. The second challenge we see is that women in Ethiopia experience a lower rate of financial inclusion compared to men. Studies on both internal and cross-border migration, we see that Ethiopian women migrants are more likely to send remittances to Ethiopia than men. In fact, the average remittance amount of both cash and in-kind remittances are also higher at 36% compared to that of men migrants. And while 41% of adult men have accounts in formal financial institutions, only 29% of women own these accounts, therefore limiting their capacity to access formal remittances. This lower rate of financial inclusion among women is different from men. It's caused by high financial literacy and also a preference for informal financial services, given the heavy documentation that we see in the formal institutions. Women often experience financial inclusion differently from men, and this experience is further exacerbated as a migrant. At UNCDF, we believe that the remittance ecosystem will never achieve its full potential unless the gender dimensions are considered. The other aspect is when it comes to the pricing structure applied by majority of the mobile money operators. While they communicate transaction costs transparently and in alignment with the National Bank of Ethiopia, which is a good thing, because this ensures consumer protection, and it also instills a culture of transparency in the remittance market. The National Bank of Ethiopia requires also the remittance service providers and the mobile money operators to reveal the terms and tariffs applicable to remittances, which includes the corresponding bank fees and agent fees, among others, and to also indicate the exchange rate that they apply to convert the currencies to Ethiopian birr. When we review different websites, we saw that majority of them are complying with these requirements, and this transparency in pricing stimulates competition in the market. However, when we look at the pricing structure, most of it is on the same model, the tiered pricing system. This tends to disadvantage the senders of small amounts, as the tiered pricing system means a higher percentage cost for users transferring the smallest amount in the small band. And then coming to last mile distribution and access, we see that the agent network remains relatively scarce, especially in rural areas where 80% of the population lives. Further, we see that financial access points in form of banks, ATMs, agents, and microfinance institutions, including point of sale services, are also still scarce, particularly in rural areas. From the stakeholder consultation, it came to be that 33% of bank branches are located in Addis Ababa, where only 3% of the population resides. The other 40% of these access points are in regional cities, and the remaining ones are found in rural areas. Part of the explanation for the lack of expansion in rural areas is one, the agent network regulation, and secondly, on the cost of setting up both agent networks and branches in rural areas. Merchants must have a business license and audited financial statements to become agents. Majority of the potential merchants, particularly those in rural areas, they operate informally and cannot produce financial statements. These requirements affect their ability to become agents. Financial institutions, on the other hand, are reluctant to expand their agent networks as the agent banking regulations requires them to report on activities of their agents. So this comes at a high operational cost and liquidity management costs, which are either in rural, which is even higher when it comes to rural areas. And then when we look at the ecosystem level, we see that even though Ethiopian innovation ecosystem is greatly underdeveloped compared to its regional and global contemporaries, it is home to a high promising innovation ecosystem. This promising innovation ecosystem can be supported by prioritizing the following challenges. The first challenge is on the low market sophistication. which is caused by gaps in investment instruments such as venture capital and limited domestic credit. Especially to Ethiopia's private sector. These gaps, they hinder the deployment of innovative solutions on the market and among underserved groups. The second issue is on limited availability of payment and market infrastructure. The retail financial system infrastructure, such as the ATMs, the merchant payment system, the cash in, cash out network, and the national retail payment system is mostly unavailable in the rural areas. And thirdly, the limited influence of domestic financial institutions on partnership with global payment providers. So the capacity to engage in and also leverage partnership can be critical to support innovation and strengthening the remittance service providers' understanding of the use and the inclusivity lens. Challenges such as licensing process also impact potential partners' appetite and collaboration, and ultimately impact innovation. So I will now briefly present the recommendations based on the 3 areas of focus, that is product, institution, and ecosystem. And each of the recommendations can be implemented by one or the several stakeholders in the ecosystem. So to improve inclusion at the product level, we recommend demonstrating and implementing a clear and sustainable business case for developing transaction fees that are aligned to customers' willingness and ability to pay. Ability to pay to enable inclusion of low-income groups. We also recommend making digital remittance services more user-friendly. Through integrating features such as the IVR, USSD, and chat box to support usage by the low-income population. And thirdly, to undertake financial and digital literacy exercise combined with targeting, marketing, and communication campaigns, especially for the rural population. So this will help to drive awareness and build trust, which eventually will lead to the uptake of digital products. Moving on to the institutional level, we recommend providing technical assistance as well as investments to startups, incubators, and accelerators that will help strengthen their research and development capabilities. And this will help in developing more innovative and inclusive financial products that will help meet the needs of the underserved segment, especially the women. On the last mile access, supporting the agent network distribution with a gender lens by identifying strategic payout location, especially in the rural areas. And this will also include an activity of mapping the agent access points and combining them with sex disaggregated data on remittances recipients. And thirdly, to build the capacity of both financial institutions. This is particularly the National Bank of the non-banking financial institutions and fintechs towards meaningful collaboration and regional partnerships that will improve the customer experience. At the ecosystem level, we recommend supporting the private sector and the government in their efforts to provide reliable payment and financial market infrastructure. So this will help to strengthen the fluidity of digital financial services and also help build the population confidence in serving marginalized population, especially those found in the rural areas and women. We also recommend developing and implementing a gender-responsive and risk-based regulatory framework for accessible and affordable digital remittances. These interventions should seek to improve inhibitory regulations and reinforce the recent progress that we have seen in Ethiopia on diversifying the digital channels and also in incentivizing formal remittances to flow, incentivizing formal remittances in Ethiopia. And finally, at the regional level, We recommend policy advocacy towards regional harmonization of remittances policies and cross-border payments. So this will help drive seamless access to affordable finance and also facilitate regional migration flows. So thank you all for your attention, and we will now move on to a Q&A session. And we'll start by addressing two questions during this session. And if there's time at the end of this the discussion, we'll come back and address the rest of the questions. So the first question that we have is, how is UNCDF planning to engage with country stakeholders to improve inclusive innovation strategies? So UNCDF, in our role as a neutral convener, we are open to collaborating with different stakeholders from the public and the private sector. This inclusive innovation that we the report that we've shared and the recommendations that are there, the main purpose is to nudge the different stakeholders when they're thinking about their strategies and where they should invest in order to drive inclusive innovation in Ethiopia. It should act as a starting point as to where we will, the innovation will be. We are also working on country-specific strategies that will help us narrow down on the focus areas that we will be investing in order to move the needle when it comes to inclusion in Ethiopia. The second question is the frequency of updating the report over time. And so this report, we realize that there is a lot of new reforms and also changes in Ethiopia, and we acknowledge that the market is constantly moving. So we do have other resources like the country monitors, which will be shared on the chat, which you can look at and see how and which country, which you can review. It contains different macroeconomic indicators in the economy, where which monitors the changes in migration, remittances flow, and any policies pertaining to migration, remittances, and digital finance. We also plan to also keep on reviewing the country assessments, not on a yearly basis, but on a frequency that will be beneficial for all the ecosystem stakeholders. So in the event of time, I will move to the panel discussion. And for the other questions that have been asked, we will come back to them during the next set of the Q&A session. We have an exciting panelists lined up ahead today. It's my pleasure to introduce to you Mr. Habtamu Wokne. Habtamu is the Director of External Economic Analysis and International Relations Directorate at the National Bank of Ethiopia. He has nearly 15 years of experience in macroeconomic research and leadership at the National Bank of Ethiopia. Welcome, Habtamu. We also have Ms. Blen. She's the Business Development Manager at Tunes. She's an experienced business development manager with a demonstrated history of working in the financial service industry and remittance space for over 7 years. Welcome, Ms. Blen. We have Abraham Tilahun, the CEO of Kacha Digital Financial Services. He's a seasoned banker with 16 years of experience in operational business development and product rollout. He has led various initiatives that have helped advance banking services delivery, improving customer service experience through strategic programs and policies. And last but not least, we have Mr. Ermias Eshetu, the CEO of FSD Ethiopia. He's leading the establishment of FSD in Ethiopia and developing the strategic interventions needed to develop the financial sector in Ethiopia by working alongside the regulators and private sectors. He has over 25 years of experience and he holds various positions in different boards. So welcome to all our panelists. And And before we dive into the discussion, I would like to remind the participants to ask their questions to all the panelists, and we will address the questions during the Q&A session. So I will start with Mr. Habtamu. Habtamu, we have seen the report. We have seen from the report that migrant remittances are an important source of foreign currency and livelihood for many Ethiopian families. They account for more than 50% of the gross domestic product and about a foreign exchange. So what steps have been taken by the National Bank of Ethiopia to improve the flow of formal remittances? And also what further steps can be expected by the industry?
Okay, thank you, Mercy, for your questions. And hello, everyone. I am Habtamu from the National Bank of Ethiopia. And to just directly react to your questions, Mercy, the National Bank of Ethiopia is just follows two steps in diverting remittance from the informal channel to the formal channel. And the first one is, as you know, it is a regulatory or policy issue. And the other one is administrative measures. Through the regulatory measures includes the licensing and supervision of the commercial banks to just provide remittance services. And also the bank allowed non-bank remittance service providers to process cross-border remittance services. And reforms have been also adapted to broaden the number of players engaged in the payment instruments issuers. And we also, the National Bank also introduced in 2020 a new directive that allows the remittance recipients to open special foreign exchange account and to save the remittance in their account. These are the major policy reforms that followed by the National Bank of Ethiopia to divert remittance from the informal channel to the formal channels. Coming to the administrative measures, as you know, sometimes sending remittance to the informal channels, the choice between the formal and the informal channels is somehow sensitive to the politics. So to convince the Ethiopian diaspora, the bank together with the Ethiopian government is frequently persuading the diaspora to use the formal channels. And the other ones, the National Bank of Ethiopia also took various administrative measures in different time periods, including the restriction on daily cash withdrawal limits, cash holding limit, and also there is a limitation on the transfer limits from account to account, loan suspension. And we also make, since some of the borderly commercial banks branches are operating, we suspect them in the participation of the informal remittance channel. So we downgraded the branches of commercial banks in the border areas to sub-branch levels so that we just try to reduce the premium between the official and the formal channels for a few period of time. But these administrative measures are, since they are short term, where the bank could not sustainably divert remittance from the informal channel to the formal channel. Therefore, in the future, the bank will work to just create conducive ecosystem for especially for the remittance service providers, since they are hybrid, meaning they are working with the commercial banks. The bank is drafting a new directive to give independent license for these service, international service providers. The other one is the bank is highly working to improve the financial inclusion, especially for women. And we are also working on the digitalization and the infrastructure from the, as you previously mentioned, from the cash-based transaction system to the automated payment system. And we are also prepared the exchange rate roadmap together with the IMF so that we will set a market clearing exchange rate, and we will improve the remittance sending cost. And finally, a digital literacy and education roadmap is prepared by the bank and will be implemented in the short run. So these are all the major activities conducted by the Ethiopian government. Thank you, Mercy.
Thank you so much, Haptamu, for that overview. I will now move on to Ms. Blen from Tunes, and participants, if you have any questions, kindly feel free to put them on the chat and we'll address it during the Q&A session. So Blen, we've seen from the country assessment that the transaction cost for sending remittances is still high at an average of 6% compared to the 3% goal of the standard development goal that we aim to achieve. We've also seen that there's also challenge in access, especially for the last mile. Can you share with us more about Tunes and the role that it's playing to drive the transaction cost down, as well as deepening the last mile distribution in Ethiopia?
Okay, thanks, Mercy. Greetings, everyone. So as Tunes is a cross-border payment platform that has been in the market since 2016. We've been operating in over 130 countries so far, with a network members of 400 plus, including banks, wallets, payment service providers, anyone who is legally allowed to make any cross-border payments. So basically, when we say cross-border payments, including remittance services or business payments in general, we expect the customers to have a seamless experience when sending transfer across the border. So that includes 1, cost minimization, 2, speed in terms of fund delivery, security, and then also the interoperability or convenience accessibility. So when we say cost minimization, so we have a lot of operational costs, integration costs that, for instance, specifically for remittance, many transfer operators are obliged to cover from their end. But as Tunes is a cross-border payment platform, allowing multiple parties to interconnect, since we've been operational since 2019 in Ethiopia, we've been able to create that access by integrating with multiple actors in the sector, including banks, wallet providers, and so on, to be able to avail that service in a cost-minimized way. So we can say we are a very good choice when it comes to low volume but high frequency transactions, which is mainly the aim for a remittance service. So for instance, in terms of cost, when we say cost, we have integrated with about 15, 16 banks in Ethiopia, and then additional partners such as wallet providers like Ethio Telecom. But this will allow any customer to be able to access the service in a cost minimized way, because not every service provider is obliged to make a direct integration with each bank and service provider in the country, but rather by integrating with a single API integration to our platform, they should be able to provide their services to bank account payouts, to wallet payouts, and cash pickup points. So just not specific to the cost and price, but in availing services in a more convenient way, in an interoperable way, at a real-time transaction transfer has been one of the aims and the areas that we've been working on in the Ethiopian markets.
Thank you for that. It's good to hear that you're not only bringing the cost down, but also offering more use cases for the customers in Ethiopia. I also wanted to follow up with a question on the reforms that we've seen being implemented in Ethiopia by the government, and also the directives that are being issued by the National Bank of Ethiopia to help improve the flow of remittances in Ethiopia. How has Tunes been able to thrive through the remittances and financial sector reforms in the last 2 years?
Great question. So for us, this past few years, specifically the past few years, the reform has made a huge difference in the remittance inflow when it comes to specifically C2C transactions or P2P transactions. So one of the major areas that we see has changed is opening up the market to non-banks to be able to provide other financial services such as Ethio Telecom. So we know the formal financial inclusion as of now is about 39%, depending on bank access, formal bank access. However, we can see it's about 51% when it comes to mobile penetration in the country. Which is a good example showing that we have an opportunity, such as the Ethio Telecom's Telebir wallet, to be able to bridge the gap in accessing financial services to the unaddressed community. So Tunes has been continuously working with multiple parties, and now with the reform, it has opened the opportunity for us to be able to bring in more traffic with parties and partners such as Ethio Telecom to be able to address the unbanked community in the rural area. So definitely this reform has made a lot of difference in terms of bringing up more traffic to the country.
Great, thank you. It's good. Thank you for those insights, Glenn. It's indeed an exciting time in Ethiopia. I will move to Abraham. Abraham, congratulations on launching Kacha as the second payment instrument issuer in Ethiopia. So we've seen several initiatives in Ethiopia, both from the private sector and the regulator, aimed at expanding the existing use cases of financial products, and also to encourage transaction volumes, and also driving access, especially to the rural population, where 80% of the population lives. Given your extensive experience in the financial sector, especially on product rollout, strategy design and implementation, where do you think the focus should be for both the private sector and the regulators and different ecosystem players? Should the focus be on expanding the existing use cases to help drive the use of digital channels, or should the focus be driving access, especially to the rural population where 80% lives? Abraham, can you hear me? It looks like he's dropped. Faiz, can you hear me?
Sorry, Mercy.
Okay. Abraham, should I repeat the question?
Sorry, Mercy. I was
Yes. So I was talking about the several initiatives that we've seen in Ethiopia, both implemented by the private sector and the regulators. One on expanding the existing use cases to drive the use of digital channels, and on the other hand, to drive access, especially to the rural population where 80% of the population lives. So based on your extensive experience, where do you think the focus should be? Should it be on expanding the existing use cases so that we can bring more people to use the digital channels? Or should the focus be on driving access, especially to the rural population where 80% of the population lives?
Okay, thank you, Mercy. Before addressing the question, let me say some general issues in relation to this question forwarded to me. Yes, indeed, there is a room for new opportunities and possibilities has been created in this financial space, specifically in the digital finance in the last 2-3 years. So I trust the main motive for such enabling change comes from two ends. One is the government initiative by large developing a national digital transformation strategy, which aims to realize digital Ethiopia by 2025. Similarly, the National Bank of Ethiopia has developed the national financial inclusion in the national digital payment strategies as a central component of the country's digital transformation journey. So then after National Bank of Ethiopia has issued very crucial directives like the payment instrument issuer and the payment operator systems and the use of agent so besides also the result of these policy reforms. Coming directly to your question, it's better to look into two sectors separately to pinpoint and identify the potential focus areas. What's common is the private sector and the regulator has to focus on the rural areas where 80% of the population reside. And also it's the backbone of the country economy. That's agriculture. I dare to say this because the urban area where most of the bank branches and digital channels are concentrated, while the underserved population hardly gets the chance to have access to financial institutions. Yes?
Yes, I think we lost you on your last point. So if the internet is a challenge, you can just turn off. And then I'm saying, I think we lost you on your last point. So if the internet is a challenge, you can turn off the camera so that we can hear you properly.
Okay. You know, the urban areas is almost over-accessed in terms of branch and digital channels, but the rural areas whereby 80% of the population resides is hardly to get financial services. If we try to substantiate this, if you look at the distribution of bank branches, almost 35% are in Addis Ababa, in the capital city. If you also look at the distribution of ATM, close to 35% are here in Addis. If you come to the credit access, currently close to 1.5 trillion is disbursed for 365,000 bank borrowers, excluding the number of borrowers from recently graduated microfinance to bank level. And even this resource, the disbursed loan is, majority of the disbursed loan is in Addis Ababa and regional cities. So I would rather stress on the rural areas, to focus on the rural areas. If you look at also the agent banking primarily intended to provide financial service in rural areas, whereby the opening of branches not feasible economically and infrastructure-wise. However, it's a common phenomenon that financial institutions have more agents in capital city and regional cities than the rural areas. So I strongly believe expanding financial service to rural areas, not only serving the undeserved population, but it's also a means of resource mobilization and customer base expansion.
Okay, great. Thank you for the insights, Abraham. So I will now move to Ermias. So Ermias, you've been at both ends, the receiving end of the regulatory environment, unlimited payment and market infrastructure, which with thanks to the initiative by the government and central bank have been transformational in the last 3 years. Now you are on the other side, acknowledging the constraints which the financial sector operates, and also playing a critical support to bridge the gap from a cash-based economy to a digital economy that will support revenue mobilization, investment, and also financial stability. How do you foresee the impact, the efforts being undertaken by financial sector depending Ethiopia in transitioning almost 78% of informal revenue towards formal digital channels over the next 5 years, on the next few years, sorry.
Thank you, Mercy. Thank you for having us. This is a very important discussion, and thank you for giving us an opportunity to share how we foresee our role in Ethiopia. As you know, FSD Ethiopia is structured as an agency, as a development agency that aims to support the development of accessible, inclusive, and sustainable financial markets for the economic growth and development of Ethiopia. So, it is with that context we have brought the FSD Africa's experience into Ethiopia. As FSD Ethiopia, we see our role in identifying the underlying causes of financial system failures We facilitate market actors to address these constraints, and we help build functional and effective financial sector that generates economic gains for a wide cross-section of Ethiopian individuals and businesses. Now, to do that, we provide technical assistance, we provide grant, research insight to policymakers, regulators, and market actors. Our vision is to contribute to a thriving financial system that delivers real value to the broader economy. So in that note, I would like to highlight the fact that we have three important pillars coming to your point in terms of making impact in Ethiopia. FSD Ethiopia's first pillar is the financial market pillar. And here we look at the overall effectiveness of the financial industry to be inclusive and accessible. We have a second pillar, we call it the digital financial services pillar. This is primarily looking at the broad range of financial services being accessed and delivered through the digital channels, including payments, credits, saving, remittances, etc., etc. And thirdly, we have what we call the risk and resilience pillar, and that one primarily looks to attempt to address the fundamental challenges in the insurance industry and in building resilience economy. So these are the way we are currently approaching the establishment of the FSD Ethiopia as an institution and in the financial systems here in Ethiopia. Now, undoubtedly, as you highlighted, I mean, it has been a profound change by the National Bank and indeed by the government of Ethiopia over the last few years. Policy changes and the magnitude of new directives has been quite impactful in the Ethiopian space. In that space, I mean, imagine having some 70% of our remittances and the potential work that is awaiting to move that into digital channels. I think in that space, we as FSD Ethiopia see a few important points. One, moving into digital channel primarily facilitates the channeling of funds both in local currency but also in foreign currency formats within a regulated means. So we see it as an important element. Number two, we see increased digital financial literacy because of that. This is another impact both on the center side and the recipient side. Then the impact of moving into digital channel will facilitate the digital literacy. Three, we see that funds and capital entering in the formal channel will then increase the pool of funds in circulation. And this is similar to if you look at the M-Pesa model or the mobile banking operators, that float of fund will in effect doing the remittances through the digital channel and being in the formal channel will mean that there will be a much improved circulation of funds available to be tapped into. Now, having all of this and increased funds and foreign currency within the structure, we see that there could be about 4 or 5 important impacts that we see. One is the structured and means-tested policy interventions can be implemented. So this is similar to the new policies that are being introduced by the National Bank, being sensitive to the magnitude of contributions this remittances bring. Patricia highlighted earlier, $5 billion equivalent to 25% of the foreign currency remittance of the nation. So this is a massive foreign currency position for the nation. And therefore bringing that to a structures to means-tested policy intervention framework will be one important impact. Number two, we see increased access to capital for the underserved and underbanked. And this is also facilitated through the access of that fund being available in circulation. The possibilities in the financial market system to improve access to capital will be enormously improved. Three, the improvement in terms of digital financial services to the unbanked. Again, we foresee digital financial services being the key conduits for scalability. And by bringing by transitioning the remittances through digital channels, it will hugely improve access to digital financial services to the unbanked. And this relates to earlier remarks about reaching out to the rural Ethiopia. Now, due to scale, this takes me to my fourth point. Due to scale and digitalization, once again, will bring the costs down. It introduces traceability and confidence to the senders and receivers, recipients. I mean, this might sound slightly a lesser concern in many aspects, but the traceability and the confidence gained through that digital means will enormously increase the transition process and will have enormous impact in the greater economy. And finally, I think, of course, all of this fits into an appropriate tax collection mechanism to the government to be able to fund its policy regime, its supervision capabilities, and things like that. So all in all, we see our role as FSD in facilitating an efficient market system, financial market system, and remittances through the digital channels having a profound impact on the greater ecosystem in Ethiopia. Thank you, Grace.
Thank you so much, Ermias, for that overview on what on what needs to be done and the role of FSD. I'd like to remind participants to please put in your question in the Q&A box, and we're going to address that during the Q&A session. So I'll come back to Habtamu with my second question. So Habtamu, we've seen recently the government announced that it's going to open up the banking industry for foreign financial institutions, which might lead to changes in the legal and regulatory framework in the market. So how do you foresee this move impacting financial inclusion in the rural areas, especially for migrant families at the last mile who are highly dependent on inbound remittances as a source of income?
Okay, thank you again, Mercy. I think when the government decided to open the financials, especially the banking sector for the foreigners, it has various objectives. But to just mention some of the objectives related with the remittance and financial inclusions, just we can raise two issues. The first one is we expect as a central bank and as the government also, we expect the new foreign banks will enhance the technological innovation in Ethiopia so that these technologies will improve financial accessibility both in the urban and in the rural area, so that the migrants will have easy access to just receive remittances within a short distance. So the foreign banks, we expect the foreign banks will improve financial inclusion and enhances technology. And the other one is the issue of competition. We also expect that the foreign banks will create competition in the domestic market that will bring efficiency, and so that the sending cost for the remittance is expected to decline in the at least in the medium term. So for these two reasons, we expect that the foreign banks which are going to come to Ethiopia will improve both the financial inclusions and the accessibility for the remittance receivers. It might not have an impact for the senders, but it might have a huge impact on the recipient side. So the financial inclusion side and the technological improvement in which these foreign banks brought to the country, I think will improve the financial accessibility. So that's especially the rural areas will have a better financial accessibility. The other one, as I previously said, the competition they bring to the country or the financial market will reduce the sending cost. As there is huge competition, the price is expected to decline, so that the remittance sending cost will decline, and so that the issue of sending cost will be improved through the these foreign banks. So these are the major expectation for the financial inclusion and the technological sides. Otherwise, from the overall financial perspective, these foreign banks will improve the credit availability for the markets, which is crucial for the economic development of our country. And we also expect additional foreign exchange inflow to the country, which will improve also the both liquidity, forex liquidity in the market, as well as to build the international reserve of the central bank. These are also the additional expectation of the newly introduced banks in the country, including the job creation opportunity for our users. These are the major issues, Mercy, we expect from the newly introduced law. Thank you very much.
Thank you. Thank you, Habtamu, for that. It's good to hear that you expect the price to go down and also access at the last mile, as well as efficiency. So we are eager looking forward to see how that will impact the ecosystem, and specifically for migrant families who are mostly found at the last mile. So I would like to move to Blen. Blen, we know that Tunes is a global market participant. As Tunes is a global market participant in the remittance industry, what learnings can you share from other regulatory environments for Ethiopia? And also, what learnings from Ethiopia would you like to share with also the regulators in the region, given that we have several people from the government and also from the central bank on the meeting today?
Yeah, thanks, Mercy. So basically, what we see as learning different markets and what we see as a challenge for the Ethiopian market are, let me just raise few points. The first one being the effect of formal market and the parallel market. So it is stated to be around 32, but now we're actually witnessing about 50% of difference. So one of the challenges that we see within the country to even bring in more traffic within from other corridors is the FX issue. So one of this thing could lead more of the customers to be experiencing the informal market, which tends to be about 78%, which is crazy, right? So what we need to understand is by bridging in the gap, either in terms of incentivizing the customers, or from banks, financial institutions, we need to bring the gap a little more lower, so that people are able to experience a seamless experience from the digital market. And one of the other challenge that we're seeing that we can take up as a learning experience from other markets is that we tend to stick with the traditional payment processing methods, which seems to be a lot more expensive, about 6 per transaction. And then when you see the other option, which is the informal market, the customers, it's about 1.5. So the difference is like a huge difference that we're seeing. So one of the experience that we see as a learning and something that the regulator can also advise on is the gap that we're seeing in the effects as between the formal market and the informal market. The second one is that we need to move from the traditional payment system to the digitization. So we know the new PII policy is making a lot of difference in the sector, but however, we're still seeing in terms of financial inclusion by itself, we've stated earlier, more than 50% of the remittance is actually received by the rural community, where there is no access to financial services as expected. And we tend to see the accessibility of microfinances in the rural area compared to the banks. So we see one of the learnings that we can take from other markets is adapting or capacity building in terms of either budget capacity, or even opening up the markets to allow microfinance institutions to be able to make a difference in accessing financial services to the customers based in the rural society. Also, when we say cross-border payment, it kind of works both ways. So we know we are a cash-based community and we are purely a remittance recipient country. But however, we still have outgoing payments that we process, for instance, for business payments, invisible payments. So whenever you bring in a traffic, you're expected to send more traffic to the other corridors. And we have many transactions, even considering it's a highly regulated market, whenever we process outgoing payments for business or other invisible payments for school payments or hospital payments and such on. So we still tend to see the market to be fixed with the traditional payment processing. So by allowing other service providers such as UNCDF, we should be able to see other options in terms of bringing down the costs, and then also in terms of convenience by turning out payments to bank accounts, wallets, and cash pickup points at a real-time basis. So that's something also we can take up as a learning, so that maybe we give it a chance for other actors to be able to pilot their services. And then from that experience, we should be able to scale up. So those are the learnings that we take, even though the new PIA policy amendments seem to bring a lot of hope. Those are the learnings that we can share within, even in terms of within inter-Africa transactions.
Thank you for that regional perspective, and also for the points that you've shared. In the interest of time, I'll move to Abraham. So Abraham, we've seen that women experience a lower rate of financial inclusion compared to men. And also from the country assessment, we see that 41% of men have accounts in formal financial institutions compared to only 29% of women. Being a new player in the ecosystem, are there any gender-specific strategy that Kacha is implementing to ensure more women are included in the formal financial system?
Thank you, Mercy. Yes, Kacha understands the gender gap that between men and women. Women are less financially included than men in multiple parameters, in terms of having formal account, wallet or mobile account, access to credit, phone ownership, and many others. So Kacha basically comes to the market to serve the low and excluded part of the society, bringing innovative product, focusing on innovations, inclusive innovations, targeted on the undeserved and underserved societies. So Kacha, in this regard, has already developed use cases and products targeted on rural women, women in the city who works on small-scale trades, women who are in SME business. We have also partnered with some financial institutions to work specifically on this woman. Thank you.
Thank you, Abraham. And it's good to hear that you're developing products that specifically address the challenges that women are facing in Ethiopia. So I'd like to move to Ermias. So Ermias, we've seen from the country assessment that there's significant, and also from Ethiopia as a whole, that there's significant progress being made in terms of the reforms and also the regulations, but gaps still persist when it comes to payment and financial market infrastructure, capacity constraints, and also gaps in terms of digital literacy, especially at the last mile. So this impacts adoption of the population, especially in the rural areas. Coming from the development partners, what initiatives should be undertaken to help close some of these gaps that we are seeing in the market?
Thank you, Mercy. Very good question. So again, I think as FSD Ethiopia, and it is it emanates from FSD Africa's work across the continent. We tend to look at more of the macro problems and solving the macro problems, so that solutions can start to trickle down to the system. I think perhaps I have about five key suggestions, and that I would like to quickly go through. One initiative that we're subscribing to is the idea of establishing a sort of a financial services, a financial solution innovation hub concept. You know, in Ethiopia at the moment, there are multiple development partners doing different things under different initiatives, often on a defined period and on a limited budget. And what we think is a sort of this innovation hub or a financial service focused focal point will provide a sort of a role to bring together critical actors such as the regulators, the policymakers, the development partners, financial service providers, legal service providers, fintechs, etc., all under one roof, and to also serve as a sort of a knowledge dissemination point. And we think that this is really where Ethiopia is at this point. You know, if you look at the magnitude of policies that are being introduced by the regulators, from the National Bank, from the government, no one is really holding all the strings together. And an innovation hub of that sort we think it's an idea we're championing at the moment. We think that it is worth to pursue, so that solutions can be found, including one for digital remittances. And local solution is very important, because me working from my banking background over the years, remittance, the remitters knowledge, both in the sending side and on the receiver side, there's a tremendous gap. So this needs some local innovation, and that has to fill in. Secondly, I think we should take advantage of the education system in Ethiopia. And as you know, at the moment we have over 45 public universities, some 83 private smaller universities. And what we, perhaps I think, the development partners should really champion some sort of a digital financial literacy curriculum to be embedded into the education system. It's vital that all these policies, at the end of the day, for as big a country that Ethiopia is, the execution of these policies on the ground will require some greater intervention. And it's really important that we start to embed this within our education system, even to some extent to have financial literacy as part and parcel of our education approach, so that people are able to understand and learn more about this, and therefore to subscribe a better solution that works for the whole Ethiopia. This is my second point. On the third point, we think that financial literacy to be language sensitive. I think it's something that development partners must take to heart. Ethiopia is a very big country. 80+ languages are spoken. Unlike Kenya, for example, where a majority of people speak English, in Ethiopia, English is mainly spoken by those who have had access to higher education. And initiatives in digital literacy should be therefore language specific to access the mass. What I mean is, our thinking and our understanding that financial solutions as we know them works for all Ethiopia just because we give it doesn't quite happen on the ground. There are places in Ethiopia that we've seen where to this day they don't even have access to basic things in their own languages. And therefore, if we're talking about the mass, the 120 million plus Ethiopians, development partners need to be language sensitive as well. On a fourth point, I think Ethiopia is emerging as a reformist in many ways. And recently you've seen the telecom space where Safaricom has joined Ethio Telecom as a licensee to operate in this space. I think this is an enormous opportunity. They both, I think, they both stand to access one of the largest digital footprints across Ethiopia. And this provides, a key opportunity to consider them as a key conduit to bridge the digital literacy gaps. And therefore, I think development partners should consider, as Ethiopia is emerging into this new digital era in the world, development partners need to consider ways of closely aligning their strategy with the telcos operating in Ethiopia. And finally, I think, what's very important right now and immediately is development partners being able to work with bankers, financial service providers, MFIs. They are key conduits for financial literacy. Not much has been done. Yes, bankers and microfinances and others have attempted and connected, as we heard from the other panelists earlier. They've opened up their channel to the global platform, etc. But when it comes to literacy, what have they done actually? Have they really taken a step forward to contribute in their own ways, through their own channels, to facilitate financial literacy or digital literacy for that, digital financial literacy for that matter? I think development partners need to consider existing infrastructure as a key conduit to facilitate the literacy gap as well. I think with this consideration, development partners could ensure greater penetration of the remittance space, particularly in the digital remittance space. Thank you, Mercy.
Thank you so much, Emias, for that. And I'm actually glad I had you mentioning the Innovation Hub, because this week UNDP just launched an Innovation Hub in Ethiopia, and it's something that development partners can actually collaborate and see how this can be sustained and also scaled in Ethiopia. So in the interest of time, we have 4 minutes remaining. I will acknowledge we've received so many questions, but we'll not be able to go through the questions and ask to the panelists. What you're going to do is we'll have a follow-up discussion with the panelists, send the questions to them, and then we'll be able to send to everyone the questions that have been asked alongside the answers that we'll get from the panelists. So I will just acknowledge a few questions that we've received. The first one is to NBE on the plan to narrow the gap between the exchange rate, between the black market and the bank rate. I think Mr. Hatamu talked about moving towards a market clearing exchange rate, and it's a project with IMF, and he will be able to respond to that in more detail, and we can share that with the participants. There's also been question on the common themes and challenges that we are seeing from other country assessments that we've completed beyond Ethiopia, and we'll be able to respond to you on that, and you'll realize that there's some commonalities in some markets that we've done the country assessment. And specifically on Ethiopia, there's also a question that has been asked on access to savings and those who borrowed through this formal financial institution, including MFI. We've shared the report with you. If you scroll through the report, you'll see also the percentage of people with access to savings, and also the difference between the men and women who have access to savings. And then there was also a question on infrastructure and what we are proposing, whether it's investment in switches, connection agreement, private sector partners, or the rails, and who will do the investment. So we'll also respond to this in details, but the overall idea of the country assessment was to assess what gaps are there in Ethiopia and provide suggestions as to the different stakeholders who can focus or target their efforts towards implementing the gaps that have been identified. So given that we're less than 1 minute, I'll pass it to Saj to do the closing remarks, and then we can close the webinar. Thank you all so much.
Thank you very much, Mercy. Distinguished participants, ladies and gentlemen, UNCDF is very grateful for your active participation The level of interest and interactions during the webinar are a true reflection of the opportunity at hand to further transform Ethiopia's remittance ecosystem. It is our sincere hope that this webinar has raised even more of your interest for inclusive innovation and its potential to increase formal remittances in Ethiopia. The vision of UNCDF of inclusive digital economies supporting migrants and beneficiaries towards economic inclusion, financial health, and reduced inequality can only be a reality in the country if the stakeholders are equipped and understand the opportunities. This inclusive innovation country assessment report is envisioned as a resource to nudge the actions of the stakeholders towards goals that are inclusive of the needs of the most vulnerable. Again, it is the ambition of UNCDF that stakeholders will freely use the content of the report to tailor their approaches to innovation and to accelerate inclusive innovation in the country. Building on that ambition, UNCDF is preparing a country-specific strategy that will clarify on which recommendations it will actively focus on in the coming year that will open collaboration with stakeholders from the private sector and public sector. For the private sector, UNCDF will publish requests for applications, which will be the main challenge of selection of partner institutions that will pave the way for institutions at the product level. The public sector stakeholders are encouraged to reach out to UNCDF directly. The approach with them will consist in establishing associations that will set the framework for the provision of technical assistance by UNCDF. We present our special thanks to, again, the Swiss Agency for Development and Cooperation and the Sweden International Development Agency for their trust, to the Ministry of Finance and the National Bank of Ethiopia for the leadership, participation, and insights, to our eminent keynote speaker and panelists for all your valuable contributions, and to the audience for your kind presence and the quality of your questions. We will share the recording and the materials with all the participants in the coming days. With that, thank you very much again, and have a good rest of the day. Thank you.